Do you ever wonder what's in store for the American economy next week, next month, next year? Do you think just because this is America, everything's going to be okay? Well, it's not. This is a video you need to watch all the way through. Let's start with this. 50 years ago, Henry Kissinger flew to Riyadh, Saudi Arabia, and made a deal. America would protect the Saudi royal family, sell them weapons, keep their throne secure. In return, Saudi Arabia would do just one thing: sell their oil in U.S. dollars, and only U.S. dollars. Every barrel, every transaction, every country on earth would use the U.S. dollar. That deal had a name. We call it the Petrodollar. For 50 years, that deal was the invisible subsidy that held your standard of living together. On June 9th, 2024, Saudi Arabia let that deal expire. They didn't renew it. There was no press conference, no announcement, no headline on the evening news. They just walked away. And in Washington, nobody told you. You think that was important? It is. To understand what's being lost, you have to understand what the petrodollar actually did for you and me. Before 1971, the dollar was backed by gold. Every dollar in circulation could theoretically be exchanged for gold at Fort Knox. Now, many believe there is no longer any gold in Fort Knox. I'm not sure either way. That would be a problem. But in August of 1971, President Nixon ended that. He closed the gold window. The dollar was now backed by nothing but faith in the United States government. Now, in real terms today, backed by its military. Keep that in mind. Now, that move should have been a catastrophe, but it wasn't, because 3 years later, Kissinger fixed it. The Kissinger-Saudi agreement meant that every country in the world that needed oil, and every country in the world needed oil, had to hold dollars first. To buy oil, you had to buy dollars. That created a permanent, artificial global demand for the U.S. dollar, which meant the U.S. could print more money than any other country without triggering runaway inflation, which meant your mortgage rates stayed lower, your grocery prices stayed lower, your retirement accounts grew in a currency that the entire world was forced to use. That's called the exorbitant privilege. Not my term. That was Charles de Gaulle in 1965. Before the deal was even signed, he warned that America would one day exploit the world's dependence on the dollar. And boy, was he right. And now, 5 decades later, the world is done being exploited. Now, there are 3 policies accelerating the collapse of the dollar. Here's where the evidence gets a little sticky for America. The petrodollar was already weakening. It had been losing ground for 20 years. The dollar's share of global reserve has fallen from 72% in the year 2000 to roughly 57% today. That decline was slow. It could have been managed. Then came 3 decisions, made in rapid succession by the same administration. And each one poured gasoline on that fire that was already burning out of control. Decision number 1, Trump's tariffs. Tariffs are taxes. I want to be plain about that because the word tariff sounds like a trade policy term, but it isn't. When the government puts a 25% tariff on imported goods, you pay that 25% at the register, not the foreign country, not the foreign company. You! Now, the Congressional Budget Office put it in plain language. American households are absorbing higher costs across groceries, clothing, electronics, and manufactured goods. Meanwhile, foreign trading partners, China, the EU, and Canada, are accelerating efforts to price their trade in currencies that aren't in the dollar. Every tariff we impose gives them another reason to build a dollar-free system. And believe me, they are building it right now. Decision number 2. The big, beautiful bill. $4 trillion in tax cuts. This is the price tag of that legislation. Now, here's what they didn't tell you about those $4 trillion. The majority of the benefit goes to the top income brackets. The people who needed a tax cut the least got the largest one. This is the largest transfer of wealth from the American middle class, and yes, the poor, in American history. Here's what that means for the dollar. To finance $4 trillion in new tax cuts without raising taxes on anyone else, the government has to borrow money. It has to issue new treasury bonds. Who buys those bonds? Foreign governments, foreign central banks, China, Japan, the Gulf states. Every time Washington spends money it doesn't have to make wealthy Americans wealthier, it goes deeper into debt to the very countries that are building alternatives to the dollar. They cut taxes for people who own private jets and sent the bill to China with interest, and they told you it was economic growth. Decision 3, the Iran War. It always comes back to this one, because this one is the most consequential, and the numbers need their own section. The Iran War and the Petrodollar we lost. The Pentagon's primary cost for the Iran War, between $35 and $40 billion. That's the direct military cost, munitions, equipment, operational expenses. More than 1,000 Tomahawk cruise missiles. Each one costs $2.5 million. More than 1,500 air defense missiles expended. More than 40 U.S. aircraft lost or damaged. And here's the number that should make every taxpayer's blood run cold. The military used more than 50%, more than half, of Americans' entire pre-war inventory of Patriot missiles. The missiles we need to defend against Russia, the missiles Ukraine is depending on, are gone. In a 100-day war, the replacement time? Up to 6 years, according to the Wall Street Journal. But the direct Pentagon cost is not the full number. Moody's Analytics, not a partisan organization, estimates the total cost to American consumers and taxpayers at $132 billion. I'm going to put that number on the screen. Look at that. $132 billion for 100 days, and we didn't even win the war. Here's what happened as a result of this war. Gas peaked at $4.56 a gallon. Before the war began, it was under $3. U.S. motorists used between 360 and 380 million gallons of gasoline every day. At peak prices, Americans were paying more than $500 million a day in higher gas costs. Think about that for a minute, friends. Not to build something, not to invest in something, just to fill their tank to get to work. Diesel hit $5.69 a gallon. That raised the cost of everything that travels by truck, which is everything. Fertilizer prices jumped 47%. 70% of American farmers said they couldn't afford all the fertilizer they needed. Airline tickets up 27%. Mortgage rates spiked again. Now here's what the war actually achieved. Iran emerged as a Middle Eastern power now. Its drone and missile inventory intact. Iran still has 11 tons of enriched uranium. And the ceasefire deal, the MOU that the White House is calling a victory, gives Iran something that no one predicted. Iran can now charge tolls on the Strait of Hormuz, the most important oil shipping lane in the world. 20% of global oil supply passes through it every day. Iran now has a legal mechanism to tax that passage. That is the prize they walked away with. At least 13 American servicemen have died. We're not sure if that number's anywhere near accurate. $132 billion in economic damage. And Iran got a toll booth on the world's oil supply. Donald Trump and Pete Hegseth told you we won. Read the terms. We got torched. While Washington was fighting a war it couldn't define a victory for, the rest of the world was building something. Let me show you what I mean. The BRICS nations. I've talked about them a lot. Brazil, Russia, India, China, South Africa, plus a growing list of new members, have constructed a payment system designed to bypass SWIFT entirely. Now, SWIFT is the financial messaging system that connects virtually every bank on earth. When America wants to impose sanctions, it kicks a country off SWIFT. It'll sanction them that way. American presidents love that word, sanction. For decades, that was the ultimate economic weapon, the nuclear option of finance. Russia was removed from SWIFT after 2022, but they kept trading anyway because China and India kept buying Russian oil, paying in yuan and rupees instead of dollars. Today, approximately 90% of trade between Russia and China is conducted without a single U.S. dollar changing hands. Now, this is not a rounding error. This is the world's largest bilateral trading relationship, rewired around the dollar. India's central bank has formally proposed linking the official digital currencies of all BRICS nations to simplify cross-border payments. That proposal is on the agenda for the 2026 BRICS Summit, which India is hosting. Now, here's the signal that should stop you cold. By the end of 2025, for the first time in modern history, gold overtook U.S. Treasury bonds as the world's largest reserve asset. Unprecedented, my friends. Gold, 27% of global bank reserves, up from 20% a year earlier. U.S. Treasuries, 22%, down from 25%. By the way, U.S. Treasuries are sold to central banks around the world to help fund the U.S. government. But central banks bought 244 metric tons of gold in the first quarter of 2025 alone. Here's what that means in plain language. When a central bank shifts from holding U.S. Treasury bonds to holding gold, they are making a statement. They are saying we no longer fully trust the United States to honor its obligations. They are saying we would rather hold metal than promises. These are not fringe nations. These are the European Central Bank's own members. When the institutions that manage the world's money stop trusting the United States Treasury, that is not a currency trend. That is a verdict. And they are rendering it quietly, 1 ton of gold at a time. So who designed the system and who pays for it? Let me give you my theory and the evidence that supports it. American hegemony, the system where the U.S. dollar runs the world, was never designed to serve the American people, never designed to serve you and me. It was designed to serve American power. American power is concentrated in very specific places. When oil prices spike, energy companies profit. ExxonMobil, Chevron, ConocoPhillips. They reported record profits during the Iran war, not because they did anything differently, but because a military operation in the Persian Gulf created conditions that moved their stock price upward. When the United States government issues $4 trillion in new bonds to finance tax cuts, the bond market moves. The people positioned to profit from that are the same people who funded the political campaigns that passed the bill. We live in a country of legalized bribery. When Tomahawk missiles are expended at $2.5 million each, the contract to replace them goes to Raytheon. The revolving door between government and defense contractors is well documented. The Defense Department's senior officials, people who approved the war budget, routinely leave government and join the boards of the companies that got the contracts. It's not illegal. It's just expected. Now here's my theory the evidence supports. The policies accelerating the dollar's decline, the tariffs, the tax cuts, the war, are not mistakes. They are transfers. They transfer wealth upward from working Americans to the people who own the instruments of war and finance. And they transfer consequences down to us, the person paying $4.56 at the gas pump, to the boomer whose retirement savings are held in a currency quietly losing its global standing, to the farmer who can't afford fertilizer. They built an empire on the strength of your dollar. It gave them a printing press, a global military, and the ability to sanction any country that didn't comply. And when that empire started to cost too much, which it is right now, when the debts accumulated, when the wars couldn't be won, when the world started building exits, they kept the privileges and handed you and me the bill. That's not incompetence. That is the system working exactly as it was designed. Now here's the clear signal. 4 things I think you should watch for. Number 1, watch the dollar's share of global reserves. It is currently 57%. If it falls below 50%, which the IMF has modeled in several scenarios, the artificial demand that props up the US dollar and subsidizes your cost of living begins to collapse in a measurable way. That number is published quarterly by the IMF. Watch for it. Number 2, watch the BRICS payment system being used by more and more countries waiting to get away from American sanctions. When the first major oil transaction is publicly settled in a BRICS currency, not yuan, not rupees, but a BRICS-issued settlement unit, that is the moment the Petrodollar formally becomes historical. India's 2026 summit is the next milestone. Number 3, watch the U.S. national debt relative to GDP. It is currently over 120%. When foreign creditors, the ones buying the bonds that financed the tax cuts, start demanding higher interest rates to compensate for dollar risk, the cost of servicing that debt becomes a crisis of its own. The Congressional Budget Office has modeled this. The numbers are not ambiguous. Number 4, watch the price of gold. Central banks don't move into gold for yield. Gold pays no interest. They move into gold when they are hedging against the failure of paper money. Gold is currently at historic highs, and central banks are still buying. This is not an investment trend. This is an institutional vote of no confidence in the dollar. Now here's my clear signal on the American dollar. For 50 years, the petrodollar was your invisible raise. It kept your cost of living lower than it should have been. Americans have collectively benefited from this system. And because of that system, many believe that somehow they are more exceptional than any other country in the world. This system let the government borrow at favorable rates. It gave every American a subsidy that never showed up on a pay stub. It was called the exorbitant privilege, and it was real. Now it's ending, slowly, then quickly. And the policies accelerating it, the tariffs that rebuilt trade walls, the tax cuts that ran up the debt, the war that pushed the Middle East toward Beijing and Moscow, those were not accidents. They were choices made by people who calculated that they would profit before the bill came due. You and I won't profit before the bill comes due. You are being handed that bill during Donald Trump's collapsing economy. The 40% of American retirees who depend on Social Security for 90% of their income, they live in a world where the dollar becomes more and more worthless every year. The boomer with $185,000 in savings, it's held in those same dollars. The fixed income household watching grocery prices climb, they spend those same dollars. Every policy that weakens the dollar's global standing falls first and hardest on the people with the least ability to hedge around it. The wealthy diversify into gold, into foreign assets, into the instruments that hold value when paper doesn't. You and me, we don't have that option. They built this empire on your dollar, on my dollar. They're cashing out, and they haven't told us yet. If you have been watching your cost of living climb and wondering why your paycheck can't keep up, well, you just found the answer. Share this video. Share it with someone you know who is counting on a dollar that the people running this country are quietly walking away from. I'm David Tomsik. This is Loud and Clear. I'll see you on the next one. Take care.